Today is going to be another episode of the best high dividend stocks in Canada per sector, and we'll be touching on financial sector. And it is the most important sector you want to look at when it comes to your investments. Hello everyone, my name is Alex. Welcome to my channel. I hope you're doing well. I hope you're staying safe, and I hope your bank started to print in some of these. No, they're not. Anyways. Today we're going to be talking about banks, financial sector, and what are the best high dividend stocks in Canada, which is primarily banks. Yeah, that's how Canada looks like. Regardless of your investment philosophy, every Canadian retail investor, like you and I, will have something in common. And you know what that is going to be? Everyone's going to have a Canadian bank in it. Even when looking at Canadian ETFs, the financial sector, the Canadian banks are at the top of their investments. Moreover, energy and financial stocks make up over 50% of TSX index. And if you're looking at the dividend aristocrat list in Canada, the bulk of the stocks are going to be coming from energy or financial sector. And moreover, every single stock I'm going to be covering today is a part of the Canadian dividend aristocrat list. And most of the new investors are starting out with investing into banks when it comes to establishing their very new investment profile. And we're going to be looking at Canadian stocks that managed to go through the worst crisis ever, the 08 crisis and the crisis of last year. To be fair, the banking sector in Canada is one of the most regulated industries in the world. And if we look at the last year crisis, Canadian banks were the first one to go down, but also they were the first ones to come back to their pre-market crash levels. Bank stocks are usually the best ones, the best prepared ones for any financial crisis. And the first one we're going to be looking at today is Royal Bank of Canada. The ticker symbol is RY.TO. Royal Bank of Canada is practically the king, the largest company on the TSX by market cap. This was crazy, the biggest company on the Toronto Stock Exchange, period. And Shopify actually went beyond them for a little bit, but that didn't last too long. This is the largest bank in the country and the most powerful financial institution. The Royal Bank is simply massive. It has more than 85,000 employees. That's about 0.5% of the total Canadian workforce. This is crazy how many people work there. But also, they include international employees. They're a very well diversified institution that has business outside of Canada as well. The bank has around 17 million clients and they operate in 36 countries. But I think the best reason to invest into this stock is the consistency of their growth. Its 10-year dividend-adjusted growth rate is around 10.7%, which is pretty good considering the safety of this stock. Royal Bank of Canada has been paying dividends for more than 100 years, and they've been increasing their dividends for the last 10 years. So they're part of the dividend aristocrat list. And their dividend yield right now is at around 3.72%, which is pretty solid for a company like this. Let's take a look at their metrics. So the market cap of Royal Bank is around $165 billion. Yeah, you can go beyond that. This is the largest company on TSX. The current yield is at 3.72%, and they've been increasing their dividends for the last 10 years. The payout ratio is a very stable point right now, is at 53%. The 10-year share price appreciation is around 94%. So there is still this consistent growth that you can rely on. And if you look at the last year, you can see there was a huge dip in the share price, and look at how fast they actually recovered from that market crash. The beta parameter is at 0.8, so in terms of share price volatility, it's pretty safe. Royal Bank of Canada is a solid long-term buy for sure. Let's move on to the next one, which is also a bank. It's a CIBC. The ticker symbol is CM.TO. The CIBC is the financial giant, and along with the Royal Bank of Canada that we just talked about, these are the only two banks that are outperforming the TSX index in 2020. And there's a good reason for this. They've been beating their quarter earnings in the last little while. CIBC recently had a very strong quarter, with earnings up 34% year over year. Let's take a look at our metrics for CIBC now. The market cap is around $55.4 billion, so it's definitely smaller than the Royal Bank of Canada, but it's still a very huge institution. The current dividend yield is at 4.72%, and they've also been increasing their dividends for the last 10 years. So yeah, they're part of the dividend aristocrat list as well. The payout ratio is super sustainable right now, is at 63%. The 10-year share price appreciation is at 51%, and a better parameter is at 1.01, so the volatility of the share price is in pretty good condition. Moving to the next one, which is also going to be a bank. TD Bank here, the ticker symbol is TD.TO. TD is the multinational banking and financial services firm which started operations in 1855. TD Bank is one of the largest banks in Canada by total assets and second largest by market cap. The financial giant has operations in both Canada and United States and was named one of the most convenient banks in the US. TD has a very prominent set of operations in the United States, which makes up at around 40% of its total revenue. When it comes to a dividend, the current yield is around 3.83%, which is pretty good, and moreover, the most important part here is the dividend increases that TD Bank was going through. They've increased their dividends for the last 10 years consistently, and over the last 5 years, it's raised their dividends on average at around 9.45% annually. That outpaced any growth provided by any other Canadian bank. Their payout ratio was around 60% recently due to all the market situation that was happening over the last year and beginning of this year, but now it's actually back to normal, which is pretty good. Right now it's around 48%. Let's take a look now at our metrics. So the market cap for TD Bank is around $149 billion. So it's very close to Royal Bank Canada. It's actually the second largest bank by market cap in Canada. The current dividend yield is around 3.83%, and as I said, they've been increasing their dividends for the last 10 years. The payout ratio right now is 48%. The 10-year share price growth is around 100%. And the better parameter is the 0.87, so it's pretty good in terms of share price volatility. And TD Bank is actually a very solid investment in terms of dividends and also in terms of share price appreciation. Most of the other Canadian stocks in financial sector are not that great or have some other downsides to them, so I haven't included them into my list. So if you know something really good, let me know in comments and I'm going to check it out and add it to my description. And to be honest, Canadian banks are the staple of the Canadian economy and are the staple of any investment portfolio. So definitely check those out. If you don't have them, it's probably the best time right now to add them to your portfolio. And if you want to check out stocks in all other sectors, definitely go to my list there where I go through the best high dividend stocks by sector. So it's going to be a list of the best dividend stocks on the TSX. Thank you for joining me here. Like this video, subscribe to my channel. Let's make this video viral so every single person is getting involved with investments. I think this is very important and everyone needs to be on board here. Again, thank you very much. I'll see you around. Cheers, bye.